Now, hey everyone, Adrian here from the Trading Optionality podcast. I have a very special guest on today. He's the author of the Macrodesiac newsletter, David Belle. He's also a personal friend of mine whom I met while we were consulting for a hedge fund in New York back in January 2019, I believe it was, if I remember correctly.
Yeah.
And that's round about where it was. And we would join in the morning calls, and we got well acquainted, and we shared ideas, and we always stayed in touch. And that's round about the time when David also started the Macrodesiac newsletter. And to paint a pretty picture, which is a true one as well, I think he's done remarkably well in a very short space of time. Given the current climate that we are facing, given where he came from and what he has achieved. And he's someone whom I've got a lot of respect for as a person, but also as a trader and a macro analyst. And I do feel that everyone listening to this will find immense value from what he has to offer. So without further ado, welcome, David. I'm very glad to have you on board.
Hello, mate. Thank you for having me.
Yeah, it's a pleasure. So, David, I think you may have seen one or two of the episodes or portions thereof, where I was chatting with Jamie, who everyone has become familiar with now. Given that he's an options expert, far more so than I am, in spite of having a reasonable grounding, and he's also a weightlifter, which a lot of people don't know about him. And I also spoke with another guy called Simon, who's a personal trainer. And one of the things that I've noticed about trading and training is that there are incredible overlapping similarities between the two. Not just in terms of mindset, but also in terms of methodologies that you follow, the structure, the tenacity that you need to have, pushing through hard times and difficulties, and the adaptation. And one of the things that keeps cropping up is structural imbalances. For instance, where you cannot perform certain moves or certain exercises or get the gains that you want without fixing those. And this is a concept that I want to present to you, as someone who's a really good analyst and a really good trader with a very holistic view. What are your thoughts on structural imbalances in trading and investing?
Well, I think primarily the structural imbalances in trading and investing come from preconceptions and assumptions. So when I look at a market, I try to think of possibly when I've been involved in this market previously, and then try to get rid of those preconceived ideas. Because I think that if you're trying to build a thesis with brand new information and trying to factor in what potentially could happen in the future, having preconceived ideas and biases is the main structural imbalance, I'd say. And practicing getting over that and going through certain exercises and really saying to yourself, look, my ego is not bigger than the market is something that can be trained and should be trained. Much like how you would train yourself in the gym. The more repetitions you do of an exercise, the better you'll get. So then you have to up the difficulty. You might not necessarily have to up the difficulty in doing this kind of exercise where you're looking to kind of come from a blank slate, but going through the motions and redoing that kind of cleaning process is pretty vital.
Okay, that's a really clear and concise way of putting it, and I love how you simplify the process as well. It doesn't seem like a very complex thing to do, at least from the way that you described it. And there's another concept in training that you alluded to as well, where you progressively do more, and that's known as gradual overload. If you were to advise new traders how to go about an equivalent gradual overload, how would you go about doing that?
So coming from the macro sphere and looking at macroeconomic research, I think the process of learning is really vital. So when I go about learning something, I might look at a broad picture. So I'll start with something that I'm familiar with. So say, for example, I don't know, um, a certain function of interest rates, okay? And I'll start reading articles, and then there'll be something that I don't understand. So I'll start researching that specific thing I don't understand until, I realize and understand how it functions within a certain mechanism or process. But then through researching that thing that I don't understand, there'll be other things that come about and crop up. So then I'll start doing the same thing over and over again. It becomes kind of like a rabbit hole. But with research, if you want to get a full picture of something and to be able to put all the moving parts together, I think it's really vital to really nail into every single little bit of a topic and all of the different tangents coming off of it. Because without doing that, then you're really not getting the full picture. So you could kind of consider that a gradual overload of knowledge almost.
Ah, okay. That's a really interesting way of looking at it. And when you say that you get the full picture and delve more into it, is there a broad-based benchmark in terms of the level of depth that you go into while researching your topic? I mean, we both know we can never have all the full information of what's happening in the market at any given point in time. But do you find that there is a standardized way to figure out that you know enough to have an informed opinion, or is this something that you have to do by trial and error as you go along?
It's a mixture of both, but I always think that being able to make something actionable is where you can actually test whether you're right on something or not. So let's say, for example, one of the things that I'm looking at the moment is what negative rates might do to banks. Because as negative rates are imposed, net interest margin, or the way that banks make money, becomes more compressed. So people might see this as banks becoming more unprofitable. So they might start shorting bank stocks. Now we've only really got two or three different, we've got about four case studies on this. So we've got Sweden, we've got Japan, we've got the Eurozone, and we've got Switzerland. If you focus on the Eurozone and Japan, banks have been decimated by negative rates.
Mm-hmm.
So we could make a case for this being something that could happen in the US, for example, and Wall Street could get decimated if indeed the Fed do go negative. It's all about them placing a bet and placing a trade on it to see whether you're right or not, because it doesn't really matter if you're right about the idea. It matters if you're right on the outcome, and that outcome should always be to make money in this.
100%, and that is such a bloody crucial point that you just made there. Though it's not your idea that matters, but the outcome that does, and yet the outcome is one thing you do not have any control over. And personally, I think that is one of the things that makes trading so hard, because as humans, from a psychological perspective, we are outcomes-based beings. We do like to feel, if I perform function X, then function Y is guaranteed to occur. And yet we both know that that's not the case. A lot of the time. I mean, I've looked at many trade ideas that have been presented on Twitter, and on paper they are 100% sound, and you can see the research that was done. You can see that this person, whoever it is, really knows their stuff and generally has the theory behind it, but the practice doesn't always align with it.
No, I agree. I think people say that psychology and stuff like that comes into it, but I think the ability to manage the trade and manage risk adequately, but especially managing the trade through the trade lifetime, is how you develop the correct psychology. I don't think it starts with psychology. I think psychology is taught via processes. and I mention this quite a lot to the Macrodesiac guys. I say, look, I start with a really, really tiny position size all the time. And then over a certain range, so it might be 100, 200, 300 ticks, depending on the volatility, I trade initially over that range and try to build up to about, 0.75%, 1% risk. Then as the market confirms what I believe, I allow the market to kind of massage myself and my ideas and get me comfortable rather than me get comfortable with the market, if that makes sense. That's when I start scaling up and scaling down, all according to volatility. So, I think, it's mainly dependent on the trade management side.
Yeah, I agree with you over there, mate. And the thing is, as you said, you do need to let the market show you the way. It's and not try and show the market the way, if I can put it that way. Because it's. And when I look at the state of the world at the moment, just to branch off a little bit into the macro side of things, you mentioned negative rates. You mentioned, obviously what goes with that is debt, and bubbles start forming. I mean, that's almost a no-brainer, and because human nature is of the sort where, if credit is cheap, why not take out some more? We both know that that's likely to happen. And speaking of bubbles and the stock market being as high as it is, when in theory it shouldn't actually be where it is, what are your thoughts on the current state of the macro environment and just the state of the world in general? I'm curious to hear what you think.
I think we're in a bad state, but I think it's a bad state on paper. The reason I say this is that if you look at, I saw a chart yesterday, and I think it's a bit of a chart crime, but it might have some validity. So the VIX spiked alongside, pretty much in line with initial jobless claims when they first came out. But the thing is that for people to be furloughed, they have to take out unemployment. So, okay, there might be some firms going bankrupt, and yeah, they'll have to lay people off. But I think the majority are being supported by the government through this period, and people are waiting just to get back to their jobs. Employers are waiting to put people back onto the payroll. So I feel like things like the unemployment statistics are largely skewed towards just being more a figure on paper rather than the actual reality. And it's the same with a lot of things. So PMIs, for example, factory orders, yeah, they're bad, but I think we will have a reversion quickly. And if you couple that with the Fed support, the central banks globally support, and also the government stimulus that's being enacted, I don't personally think that we'll see an extended bear market straight away. I think actually the bear market will come as a result of these policies now. Well, that's just my opinion, of course. We could head to 1,500 on the ES really quickly. I don't know, but I'm just kind of piecing things together and asking, well, if it's really that bad now, why hasn't everything gone to shit already? And that's kind of the perspective that I'm looking at now. But having said that as well, the reason why I like to trade FX is because it exposes certain granularities in more of a micro kind of view as well. So I like to trade Aussie yen purely because you've got the exposure to the broader macro view of, okay, if everything does go to shit, then Aussie yen should sell off. Yen should get bid as a safe haven, Aussie's high beta. So yeah, it will sell off. But then we've got the longer term issues of Australia having a really, really poor quality housing market. There's been issues with Aussie banks over the last 10 years. And also Australia didn't really face a recession. So you've got kind of, I don't know what to refer to it as. Yeah, you've got probability on two fronts there. You've got the micro probability of looking at capital flows and stuff to do with the actual country, but then you've got the broader view and probability of the global issues that could occur. So that's kind of how I try to approach markets. I try to approach them from a way where you've got a slightly more micro macro view, but then you've got a macro broader view as well, looking at it globally.
I would call that, from my personal background, a very much a Brazilian jiu-jitsu kind of approach. And the reason why I say that is because you clearly are able to pivot into different positions. If one submission, for instance, doesn't work out, that's fine. You've got an arsenal of techniques that you can use to line up another submission. And if that doesn't work, you've got another one that can line that up, because you understand the structure of the body, and the body being the macro environment. And that in itself creates a sense of not only robustness, but also anti-fragility, if I can call it that. Because you can always, you seem to be able to position yourself in a way where shocks to the system will not eliminate you from the game, so to speak. And that is something that I would like you to delve into a little bit as well. Is, how do you don't have to go into overly deep specifics if you don't want to, but how do you position yourself to become more robust or anti-fragile, so that you don't have these wipeout events that killed so many people 2 months ago?
Yeah, sure. I think for me, I realized that the longer term game is where the edge is. I used to day trade. I used to swing trade kind of intra-week, and I found that I'd have winning periods, but the losing periods would hurt way more, because you're far more involved. You're far more involved in execution. So that's one way that I kind of overcame an issue there. But also recognizing that I'm going to have losing months. I've had about 2 losing months in a row now. I'm about 6.5% down since March. But I recognize that last year I had 3 or 4 losing months. I make the money over maybe 2 or 3 quarters, 2.5, 3 quarters of the year. So it's natural for me to have losing patterns like this. Could you go back and repeat what you asked again?
About the positioning. How do you position yourself to become more anti-fragile or robust? Even if you can't do anti-fragile, robustness is good enough a lot of the time.
Yeah. Okay. So also recognizing where you are invalidated is also a good way to go as well. And also being able to change the game that you play. So what I mean by that is really understanding, say, when volatility changes. I've been caught out by this recently. I've been trying to trade larger ranges, but because volatility is dampened and I predominantly trade Aussie yen, you don't get those larger ranges, and you have to really work the trade a lot more. You have to be selling rallies, or you have to be, buying big dips and just trying to trade it more as a mean reversion rather than a trend, which I was used to through the whole of last year. So I think, and being open-minded comes with that as well. You've really got to be open-minded, and being able to face new information and make a decision on that information that might affect your current thinking, and being able to then change your actions through this new thinking. It's really important to be able to do.
I agree, and your answer just reminded me of something that I continuously say to myself, not just from a trading perspective, but just overall in life. It goes something like this, to paraphrase: you have to be very honest with yourself about yourself. And from a psychological perspective, as you said, you you have to know what style of trading works for you. I'm not a good day trader myself. I'm a horrible day trader, and I learned that the hard way. Over the longer term, like yourself, I think you and I have very similar ways of looking at things, and also our strategies that we implement tend to require a bit of time in order to work out. I've just noticed that on a daily time frame, yeah, you get these algos and you can calculate stats. I've got a list of stats that were given to me by a very good day trader who calculated them over a 2,000 day period, which is quite considerable. But I could never crack it. I just never was able to crack the whole day trading thing because my temperament is not suited to all that noise. And I think that is something that has really stuck with me, is that as a trader, you have to be able to be very honest with yourself about the style of trading that you wish to implement to actually make money. Because as we both know, that's the goal at the end of the day. It doesn't help that you try and be a day trader when you're actually a better, I don't know, swing trader or position trader or macro trader. Do you have any thoughts on how new guys or even more seasoned guys who might find that they are stuck in massive losing streaks could actually figure out, maybe what I'm doing is not as good as what really suits me, if you see where I'm coming from with that question?
Yeah, I think if we take the example of me at the moment, because I guess you've always got to be constantly learning, is that I've recognized that I have to trade smaller ranges. I can still be event driven, but that these event driven kind of news events and things like that, they're not going to cause the kind of moves that I'm necessarily expecting. So I've got to be prepared to be more aggressive with time, to push stops way into profit way sooner than I normally would like to, and also to ensure that my position size is adequate. So I tend to start in, really, as I said before, really small position sizes and work myself up to 1%. But now I'm thinking, in this current market environment, which isn't necessarily suiting my trading style, I've really got to get to 1% or 2%, 3%, really, 3-4 times faster. So it's one of two things. It's either I sit out or I do that. And I don't like sitting out because there are opportunities, and these markets are really quick.
They are.
You can build up some event risk really quickly within a couple of hours at the moment, which can lead to volatility spikes. So this is why I'm still in the market. I'm still selling Aussie yen, but I've not yet started to push my position size up to where I'd possibly like to be able to make adequate cash. This has been going for the last 2-3 weeks now. It's just not suited me. I prefer the faster, quicker markets where you're seeing lots of volatility, because it allows you to just ride the trend really nicely. And you're breaking levels consistently. You're getting big stock cascades, which is causing 20-30 tick candles in half an hour, an hour. So you've just got more opportunity there for me, and it also means that I find it easier to take money off the table in volatile markets, because you can get a really quick move your stop, another really quick move your stop again, and then if it comes back, I don't care, because that's how I take profit. I take profit on moves into stops. I never have take profit orders in, because I just don't know what's going to happen next. So I'd rather have my risk set and my take profit set where I know the market's already been, and that just allows me to then not worry and not get so anxious.
That's a very interesting approach. So you take a profit via, well, it's essentially a stop loss, but also a take profit. Have I got the idea right in terms of how you phrase that?
Yeah, exactly. So you can think of it as a manual trailing stop, really.
Okay, gotcha.
I do use trailing stops as well, but a lot of the time I do like to just shove it above a certain volatility measure. So it might be ATR plus 5 ticks if we've moved into profit. So yeah, that's the way that I like to move.
Dave, I think your mic is covered. Just double check.
Can you hear me again?
Yeah, I can hear you now. It's just dipping a little bit.
What about now? Is that okay?
There we go. That's perfect. Thank you.
Oh, perfect. What bit did I get up to, sorry?
Okay, there we go. I can hear you perfectly now. I think it's just the internet connection. I want to run an interesting thought experiment with you because we have spoken about exponential growth and the incredible increase in the amount of debt in the world, which is absolutely staggering if we consider that we are now at what, $270 trillion in global debt. Have I got that?
Wow.
Yeah, it's roughly right. So
that's a lot.
I recently saw this episode of a show called Golden Money or something like that. It's by a guy called Mike Maloney, who likes to talk about gold and debt and all that. And they use this incredibly interesting thought experiment to explain exponential growth. And the reason why they use it is because they say the human brain doesn't really understand how incredibly rapid exponential growth is and how it actually works. So they said, for instance, think of a large stadium, say Wembley Park. I think that's the biggest one we have over here in London. And I give you a magic eyedropper. You go and stand in the middle of the field, and I give you an eyedropper that doubles in size every minute.
Yeah.
How long do you think will it take to fill up the entire park?
Well, it's
just a guess.
About 20 minutes.
Close. 50 minutes.
30 minutes. Okay.
Yeah, so 50 minutes. And at what time is the park still a 97% empty space? This blew my mind, by the way. 45 minutes.
What part of the park is...
Sorry, at what time is the park still 97% empty space?
Did you say 45 minutes?
Yeah. Wow. So 5 minutes until it's filled up, pretty much. So that is actually quite staggering if you think about it in terms of how rapidly exponential growth actually takes place. They went on to use the example by saying, if you look at human population growth, it took all of human history up until roughly 1960 to reach 3 billion people, and less than 40 to add the next 3 billion. I mean...
Thanks, China.
Yeah, thanks. And India. Don't forget about them.
Yeah. Mm-hmm.
And another interesting point that they made is that exponential growth tends to speed up towards the end of the cycle. Now, given this macro framework, if I can use that phrase for the benefit of this discussion, what are your thoughts on what we are currently seeing regarding all this exponential growth?
I think what we're seeing is an experiment in modern monetary theory. I'm not hugely versed in it, to tell you the truth, but it'll be very, very interesting to see what the effects of this will be, whether the effects come through taxation or austerity, something like that. I don't see there being any unwind of a balance sheet ever again. Let's put it that way. So we're never going to get to, that $500 billion level that was before 2007. I think that QE and low rates or negative rates are going to be here pretty constantly. But yeah, I would really, really like to kind of have have a crystal ball to see in a year or 2 years' time what the effects of these policies now are, because printing to fund the government is essentially modern monetary theory, isn't it?
Yeah.
I honestly just don't know whether we'll have massive inflation, whether it'll be deflation consistently. It's such a bizarre time that, and we're living in an experiment, I think, at the moment.
Yeah.
It's crazy.
You see, that's exactly how I feel as well. And in some ways, I'm glad that you confirmed that I'm not crazy for feeling the same way. But I'm also slightly unnerved in some way that, someone such as yourself who knows more about this field than I do also doesn't really know where we are headed with this. So it's a bit of a dichotomy.
Yeah. I mean, we never know where we're headed with anything, and anyone to profess that they do know is talking a lot of bollocks, pretty much. But really, with this, especially considering it's the US who, have the reserve currency of the world, everything's settled in dollars pretty much. To think that they're going to negative rates and that they are funding the government at the same time, it's just crazy to me. I honestly don't know what will happen, and maybe the dollar bears will finally be right about something. Maybe they will be right, but what's the alternative there? It always comes back to the dollar. Every single argument comes back to the dollar, whether you're talking about, emerging markets or you're talking about Europe. They've opened up dollar liquidity swap lines because they need dollars to function. It always comes back to the dollar. And I think the analysis of the dollar is very, very pertinent to the question that you're asking there, with regards to what the effects will be. Honestly, I don't know. But right now, I've just seen the Aussie yen's broken a level to the downside, which I'm happy with.
Well, brilliant. Especially for your position. One of the current theories, and this was presented by Raoul Pell in his. But I'm just I'm just going to present it in any case. He reckons that it's possible that in the future dollar cannibalization could take place. Now, to be very honest with you, I don't quite know how that would take place, and I don't fully understand all the mechanics behind it. I'm not going to profess to be an expert on this, but that almost reminds me of that symbol of the snake eating its tail. You might have seen that symbol that they use in some martial arts or in some movies where you see the snake actually eating its tail.
Yeah.
And to me, it's just a bit of a strange concept that a currency would cannibalize itself. I mean, how do you even get to that point? Does that make sense to you?
What did he mean by cannibalize itself?
You see, that's the part that I'm not entirely sure of, though, is that the dollar is going to keep on. He said that he reckons that the dollar is going to keep on expanding in value, from the way that I understood the report. And eventually it could become so strong that it will start cannibalizing itself. It will actually start to disintegrate under its own weight. That's sort of how I'm understanding it. And anyone who knows more about this should please correct me if I'm wrong, obviously. But I'm just struggling to see, as you said, what is the alternative? I mean, we can't exactly go to the Chinese yuan or the renminbi, whichever it's actually called. I don't think there are enough euros or pounds in circulation to warrant using either currency as the world reserve at the moment. I mean, where do we go? Gold's not a viable option.
Yeah, I mean, that would be my initial argument to refute kind of what he's saying. Potentially there is an issue with emerging market dollar denominated debt, where if the dollar does become too strong, then emerging markets start to default on their debt piles, and that creates kind of maybe a liquidity seize up globally, and those growth markets then become trapped. That could affect the dollar and the US. But it sounds to me like Raoul is selling something. It's a nice headline to sell to people. There's nothing wrong with that. He's taking the emotional edge, but cannibalize is a very kind of visceral word, isn't it? I haven't read the report, so maybe it becomes a lot clearer as to what he's talking about. Excuse me. But I'll give that a read if you can send it over. And
I'll happily send it over, because I would like your opinion, and maybe I'm missing something as well. I mean, I think we both know I'm very honest and open if I'm missing out on something in terms of my understanding or my interpretation of it. But I just thought I'd get your thoughts on just the initial idea thereof, because everyone is trying to be the next big expert on what's going to happen in this current environment that we are in. And I think the most truthful answer that I can give is we haven't got a damn clue how exactly this will play out. And purely because we have faced pandemics, but I don't think any of them led to a global lockdown like this one, unless I'm wrong. Are you aware of any that have led to a global lockdown like this?
No, none. I mean, I think Taiwan might have shut itself off from China during SARS or something. Maybe I'm reading that wrong, and they've only learned from SARS and they're doing it this time. But global shutdown like this, no way.
Exactly. So that being the case, then we are literally in, for lack of a better word, even though it's so overused, unprecedented times. And I think no model is going to be able to accurately predict what the future is going to be going forward. And as you mentioned, and getting back to modern monetary theory that you alluded to earlier, I'm also no expert in this field, but something that does keep cropping up, and I'm not the best accountant there is. I sucked at accounting at school. I was absolutely horrible at it. And
you did accounting at school?
Yeah. Well, we did accounting at school, but I dropped it in year 8 or something like that, or year 9. I was just terrible at it. My math was also terrible, funny enough. How did I become a trader if my math is so terrible? I suppose.
Mate, me too. I asked myself that same question. I mean, I absolutely hate maths, really, but I find the statistics part interesting. I don't know.
Yeah, me too.
Economics maths, to be honest, but econometrics I liked because you could actually apply it, you know. But the theoretical maths was fucking torrid, so boring.
No, I feel exactly the same way. But the one thing about modern monetary theory, or magic money tree, as some people like to call it, is that surely someone is getting screwed over because at the end of the day, debt is also an asset. If you really think about it, though, if you buy a US Treasury, and I just use that as an example because it's the most popular one in the world, I think. If you buy a US 10-year bond, and all of a sudden the US says, "Oh, sorry, we're going to default on our debts," you are pretty much sitting up shit creek, for lack of a better word, because you're not going to get your money back. And there's this prevailing idea among, I like to call them young idealists. And I mean, we are still young guys, but I don't think we're idealistic. We are realistic. That's something that I've always liked about you as well. But among the young idealists, or where they say, you know, when they come into power, debt forgiveness will be a thing. But I don't think it's that simple, because all these countries that have bought the debt are going to get absolutely screwed 6 ways to Sunday. And how do you reconcile that then? What do you tell those guys who invested their money into those assets? I mean, it doesn't make sense.
No. Are you talking about young people saying that the US will default on Treasury?
Well, not just default on US Treasuries. I mean, like, something that I've read a few times is that especially many of the new entrants at uni have this, for lack of a better word, idealistic notion that, oh, we can just forgive all debt. You know, we're not going to worry about the debt that was racked up by our parents and our grandparents. We'll just press the reset button and all will be forgiven. And I'm finding a very hard time to imagine that going down well in practice, where everyone will just simply say, it's okay, no problem, all debts forgiven. When we both know that when it comes to assets worth literally trillions upon trillions of dollars, I don't think you're just going to give that up. What are your thoughts on that notion?
Oh, this is the thing, mate. It's students being students, really. I went to a very liberal university. I went to the University of Sussex, and I don't think there would have been many traders coming out of that university. Let's put it that way. They had the student loan, the student tuition fee strikes. They were very, pro different types of oppressive rights, anti-oppressive rights, which probably aren't actually oppressive at all. It's just they're mental, and they just live in cloud cuckoo land, mate. I don't really take them seriously because they don't have any real skin in the game. They don't really have any specific experience outside of their own little bubbles. And their ideas will never be able to come to fruition because by the time they try to implement them, they'll realize that they're totally wrong and they're unimplementable, if that makes sense. So I tend to just shout at them and laugh at them, really, because I find them largely irrelevant. But it does make for a good laugh every now and then, and a good bit of commentary on how thick they are.
Oh, absolutely, and I fully agree with you on that.
I'll give
go ahead.
I'll give you an example. So there was this silly, exaggerated headline that came out about Jeff Bezos being a trillionaire, and people are saying, "Oh yeah, he deserves to. He should die. He should do all this. Blah 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 blah." He's only a trillionaire because, firstly, he founded a company that's done unbelievably well. Yes, it's a monopoly. I disagree with that, but monopolies are afforded and created by government. There's no monopoly, I don't think, that is created just through sheer power of an idea or a good product. Monopolies are general. Maybe Apple's a good idea of a good example of that, because people are just in love with their marketing and design, genuinely. But governments create monopolies through subsidies. They create monopolies through all of these different things. And the only reason Bezos is really a multi-billionaire is because he owns a hell of a lot of stock in Amazon.
Yeah.
And if you really want to go into the reasons why he's a billionaire, all you have to do is look at the central banks, because Amazon's the largest company in the equities indices. They pretty much prop up the indices at the moment as well, because capital's so concentrated into them. And as a result of that, Bezos's stock is worth a shitload. If he were to liquidate that stock today, if he were to sell all of that stock today, he wouldn't be worth anywhere near what his net worth is now, because the bid would be 10 times lower maybe. But these people who are criticizing in this way just don't understand the mechanics of things, and that's a perfect example of what you're talking about. I raised this last night in a thread actually on Twitter, because Jack, the Twitter CEO, founder,
Dorsey,
Jack Dorsey, he said that he was creating a coronavirus fund and a fund to be pro UBI, pro women's rights, etc. Which, great, fine. But he mentioned also that he's selling his Square stock to do this, but he's drip feeding it. He's just drip feeding it, and I put.
Yeah, it's not all in one go. No way.
Exactly, because otherwise his net worth would be nowhere near the amount, and he wouldn't get a return on his equity. But you know, it's just an example of the people who constantly shout the loudest, not actually understanding reality of money and financial markets. They do sometimes have good suggestions, but most of the solutions come down to, yeah, take away all the wealth, and it's like, but you don't know the processes, you don't understand how it'd work. Okay, you take away his stock from him, which makes up all of his net worth. How then do you convert that to cash? Oh, you've got to sell it on the market. Okay, how do you then get that cash adequately if you sell at the market? Oh, wait, we might have to wait 10, 20 years to be able to get an adequate return through drip selling, you know? But they don't get that.
No, they don't. And I'm really glad that you are one of those enlightened people, if I can use that phrase, and I genuinely mean it when I say that. I do find you very enlightened, and I've always liked the fact that you are a straight talker. You know, you don't like to sugarcoat things, and that is why often, if I do have a question that needs a serious answer, and I'll say this to anyone viewing this, you are one of the people I go to ask that. If I really need someone to be straight up with me about things. And you made the very valid point when you said about the cloud cuckoo land situation in which many students are finding themselves. And like yourself, I don't take them seriously, and I don't think that these ideas are necessarily going to become mainstream. Yet, unfortunately, there is a chance that some of them might make it into parliament, and they might make it very, and that they might actually implement some of these crazy freaking ideas. God knows how they will, but stranger things have happened, and that might make it very hard for capitalism to thrive. Well, because sorry, go ahead, mate.
I think that what's happened is that the Overton window has been shifted massively. So people call the Tories, for example, a far right or right wing party. The Tory party is basically New Labour, who is centrist. And, you know, that's the reason why the Tories have been winning for the last couple of years. Even under this apparent massive, radical, brilliant change that was meant to be Jeremy Corbyn. But it's because Jeremy Corbyn is so far left that this Tory party is considered centrist now. If they were a true right-leaning party, then they would have totally different policies to what they've had, you know. And the issue is that the more left we get with these ideas, the more that conservative ideals, economically conservative ideals, such as, you know, pro-business, etc., get drowned out. And that's one thing that we've really got to watch for, and one thing that I'm pretty worried about, because, you know, parties don't seem to be pro-business. I would love a 5% corporation tax, for example. I would love for land value to be taxed and people not to be taxed on their incomes or capital.
I agree.
But we're unlikely to get that. We're totally unlikely to get that. And maybe that's not even, you know, necessarily, if you go into the philosophy behind that kind of economics, which is Georgism, that's not necessarily a left or a right thing. It's just efficient taxation and efficient outcomes. But trying to explain that, because we're such a landed class in the West, is or trying to get any kind of outcome with that being included in policy is pretty much futile, because, you know, people love housing and speculating on housing. It's big business. But
absolutely.
Yeah, just worried about that Overton window shift, really.
I'm going to read up a bit more about the Overton window now that you mentioned it, because I'm familiar with the concept behind it, but I don't know all the dynamics. So thank you very much for mentioning that. But also something, and I'm sure you'll appreciate this. This is a conversation I've had with a few people before, and You clearly have a pretty damn good idea of what capitalism is, what socialism, what communism, and all of those things are.
Mhm.
But for the general masses, and I think these are things that people really need to get more educated on, because they don't know what they are talking about a lot of the time, and they don't know what they are advocating and striving for. Like, let's use socialism and communism as an example, because capitalism is getting such a bad rap nowadays. And your Bezos example is a perfect illustration thereof. I like to use the argument by saying that if you really look at socialism, socialism is a stepping stone towards communism. And the way that most people view communism is that everyone is equal. Yeah, you're all equally screwed. That's essentially what it means. You're equally screwed.
But
Because
with that, you have a bourgeois political class who end up being, the upper class who end up being those billionaires.
100%, that's exactly what I wanted to say. And I take it one step further by saying, if you think capitalism is unfair or concentrated, wait until you see how unfair life becomes under communism. Even hardcore socialism, which is borderline communism, is very unfair because the political class are the ones who rule the roost.
Yeah.
China is a perfect example thereof. Yeah, it's capitalist in some ways, from an economic perspective, where you can start a business and stuff. But let's be honest, most of the people in the CCP are billionaires in pretty much any currency in the world. And it's mainly due to the fact that they are politically connected. And I think if we look at the political connections of many large companies in China, for instance, we'll find that there are some links to the CCP party as well. I don't know what your thoughts are.
Yeah, no, it's true. But at the same time, I think we can be very critical of the system that we're in now. And I think you were there when I did that video on central banks at the studio, weren't you?
Yeah, we did.
It was a video that I called "Why Central Bankers Are Ruining Your Life," and these central banks are causing, ironically, the downfall of capitalism. I think at the start of this, did we mention Eurozone and Japanese banks? I mean,
we did.
If you want to talk about capitalism, the picture that normally comes into your head is of a bank, right? Ironically, central banks are going to cause the biggest issues with US banks pretty much ever, in my view, if they go negative. So, the system that we're in now, with central banks being at the foreground and pretty much controlling the economy, controlling markets, that's not good either. It's really, really not. And it's not capitalism. It's not. Capitalism should be, you've got the right to set up a business and make money from that business without any real intervention from the government. It's probably a libertarian stance. I do venture into libertarian stances sometimes. But with a central bank, I just don't think that you can be a truly capitalistic society. Okay, by certain definitions you can be, but if you were to look at it from an ideological perspective and not necessarily a practical perspective, I think as long as you have a central bank, you cannot be a capitalistic economy.
No, I also don't think so. I mean, I saw this really interesting video the other day. It's a channel that I enjoy watching, for entertainment purposes, as well as just picking up a few ideas here and there for my overall perspective. AK Fallible is the channel's name, and he gave examples of how government intervention is not a new concept. It's been around for it's been around for over 200 years, if not longer than that. I'm sure there are cases where we can find it, and whether it's to prop up a single stock, or whether it's to prop up a single market, or a currency, or any of those things, it does exist. But ironically, in doing so, it does create other side effects due to that steroid effect that we spoke of when I went on your podcast.
Yeah.
And the second thing is also, if you recall, I mentioned that the last time the US debt was fully paid off was in the 1820s, I believe, under the Jackson administration, when they got rid of the central bank. I mean, doesn't that show you something?
Yeah, well, I mean, it might just be a function of getting rid of the central bank, though, right? Because if there's no central bank, then maybe that's the reason why it got taken away. But yeah, I totally agree. I just find the fact that markets are so detached from the real economy, and I don't necessarily give a shit because you're still trading, and the fact that central banks are involved propping them up is a fundamental reason to be long, for example. But the fact that they're so detached is pretty ludicrous. So you kind of have to separate them from the job is to extract money, I guess. Having said that, I'm absolutely dog shit at trading the ES. I'm woeful at it. So take that with a pinch of salt.
Yeah, I mean, not everyone is, and I do think that it can be a bit of a hard market at times. I've had good moments in the ES, and there have been times where it was literally like taking candy from a baby, so to speak.
Yeah.
How easy it's been. But lately, I just find that I don't understand it. I honestly don't understand what I'm looking at a lot of the time, and it pains me to say that because it's something that I've traded for a number of years. But I look at this and I think, what the hell am I doing? What the hell am I actually even looking at here? Because none of this makes sense to me anymore. And maybe that's my own cognitive downfall, where I want something to make sense when there's no sense to be made, but I'm still not willing to really risk capital on something where I have no bloody clue what I'm doing. That's the other side of it.
No, I agree. And there's just random spikes out of nowhere, and you just can't really account for them. I don't know if anyone can. I mean, they're good if you're positioned the right way, but I just can't seem to build a valid thesis on. Well, I say thesis. It's a bit talking out of my arse there.
Or narrative, thesis or narrative. I would go with that.
Yeah, a valid way to be able to trade it, really. I mean, I trade Aussie yen, which is a risk proxy. It's very tightly correlated, actually. But the ES is just different. I can't get the adequate risk parameters. I can't seem to do a lot of the things that I would do in the FX land with the futures indices.
No, but I think the concentrations are also completely skewed towards tech right now. I mean, for 5 stocks in a 505 stock index to make up 20% or more of the weighting is absolutely ludicrous, let alone insane.
I mean, I did a ratio of the Nasdaq in Russell terms, and the increase was absolutely mental. Let me see if I can get that chart up now, actually. IXIC over Russell. Sorry, one sec, mate.
No, take your time. I love using your Tradingview charts, by the way. For all the viewers, David is also the head of, just correct me on this, the head of growth for Tradingview in the UK.
Yeah, head of UK growth at Tradingview.
Yeah, so the head of UK growth for Tradingview. So if you want a really good charting package, look at me marketing you here. Use Tradingview. I use it myself as well, and it's such an easy to use package. And not only that, and here's just this is my personal opinion on charting packages and trading terminals. It's visually appealing to look at. And you might think, oh, so what? That's not a big deal. Yeah, it's a big deal, considering how much time you spend looking at the damn things.
Yeah.
So you might as well enjoy what you are looking at, and also it makes it easier for you to analyze things when you're in a state where you feel, I actually I actually like what I'm looking at. You know, the color schemes are very soft on the eyes, especially we crunch numbers, 10, 12 hours a day, sometimes even longer.
Yeah.
So,
And
yeah, go ahead.
a pretty unknown thing about TradingView as well is that you can actually access all of the Fred's data as well. So the Federal Reserve of Louisiana, which is a ton of macro data. So if you go to Quandl, so it's QUANDL,
Yeah, I use that one.
yeah. And you type in the data that you want from Fred, and then there's a little button on the right hand side that says TradingView. It will take you to a TradingView chart, and you can display that data on TradingView as well. So the chart's a little bit nicer than Fred.
No, I definitely like the package, and you know, I think you have done very well with you know, promoting it and the growth that you've achieved here in the UK as well. Because I became familiar with TradingView back in 2015, I believe it was, long before I even came over to the UK, and I didn't know much about it at the time, but I was very impressed with what I saw. Especially how easy it was to incorporate different patterns and the incredibly wide array of indicators. And I know I sound like such a technical analyst right now, but I'm not a technical analyst. I just use technical analysis. It's just one tool in the arsenal. And I think that's how you use it as well. I've never seen you as being a chartist per se, even though you just use them as part of your tools.
Yeah, I mean, I used to quite heavily, and I still do have technical strategies, you know, based off Heikin-Ashi. I've got quite a strong one actually that I probably should try and use a little bit more in incorporation with macro stuff. But yeah, I don't really use it to a huge extent. I've never really used indicators, apart from maybe looking at a 200 daily moving average or 200 week moving average, but really to base a trading decision off.
Yeah, it's I use it as an entry point or exit point, sort of confirmation tool more than anything else. I don't base my ideas on it. You know, if something is fundamentally crap, I'm not going to go long of it, for instance, regardless of how good the technicals look. And you'll be shocked by how many people actually do that. You know, exactly that. Oh, the technicals look great. Let's go into this. But well, I think we can carry on talking about all this stuff all day. But yeah, I don't want to make this too long, obviously. David, do you have any final thoughts that you'd like to convey? I mean, you know, anything regarding what we spoke of, anything new that we didn't get to cover? I would just like to hear from your final perspective.
Oh, sorry, I was going to get up that the chart of the Nasdaq in Russell terms. So from March, okay, the value of the Nasdaq, the ratio, essentially increased from 5.4 to 7.3. So that indicates that the Russell declined by a massive amount relative to the Nasdaq. So what we can determine from that is really that this stimulus from central banks has gone into, and now this is quite crude, but it's gone into the large tech stocks and has not touched the Russell, which shows the real economy a lot better. It's not touched it at all. So I think just be very wary of the detachment from markets and the real economy, and potentially what could happen if we consider that both need to mean revert at some point. So the economy needs to start up again and get more growth going. And as a side to that, the markets probably have to go and converge with the real economy at some point, which probably would indicate to me that they need to get down a bit.
Yeah, I think so too. It's that whole mean reversion thing that we've spoken of many times before.
Yeah, and so yeah, it's crude. It's crude, but it's definitely a theme out there.
So one of the just to build onto your theme regarding the Russell and the Nasdaq, the money has essentially gone into the cloud and out of the bricks and mortar, if you want to look at it that way, you know, because Nasdaq being more tech and all that stuff. So
Good enough.
maybe that is a precursor of what the future could look like to some extent, where things will become a bit more cloud-based or online-based,
Yeah.
especially in the short term. I don't know about the long term, but definitely the short term by the looks of it.
Yeah, no, exactly, mate. I'd agree with that.
David, thank you so much for your time. I mean, I really want to have, I would love to have another chat with you to cover other topics that we didn't even get to delve into today. You're like a treasure trove of knowledge. You know, the more I speak with you, the more questions prop up into my head, and you answer in such a way where I just think, damn, now I want to know more about this or more about that. So thank you so much. Yeah, so thank you so much for your time, and you know, not best of luck. You know, I know you'll be a great dad. You know, but congratulations once again on the new addition to your family. Event taking place very soon, and you know, once this lockdown ends, let's catch up for a coffee. I know, like myself, you don't drink a lot in any case, so or dinner sometime. Let's all get together and have a proper catch up in person. It'd be great to see you again.
Definitely, mate. Absolutely.
So have yourself a great day, my friend, and thanks a lot for everything. I think the viewers are really going to enjoy this one.
No worries. Thanks, guys.
Cheers, mate. Have a good one. Bye.